That's where we are today. We are designing these agents very prudently in our ecosystem to make sure that they're 100% right and that the judgment is consistent. It has to be perfect, and it has to be trusted, and it has to be accurate.
Welcome back to CFO Weekly, where we're talking with financial leaders about how to build efficiency in their teams, create time for strategy, and ultimately get results. This podcast is brought to you by Personiv, the trusted leader in finance and accounting outsourcing for over 30 years. See how Personiv's customized solutions can help you streamline your operations with teams that start as small as one. Visit the website at personiv.com to learn more. I'm your host, Megan Weis. Let's jump right in. Welcome back to CFO Weekly. Today I'm joined by Patrick Villanova, Chief Financial Officer at BlackLine. Patrick brings deep experience across SEC reporting, SOX readiness, IPO preparation, acquisitions, and global accounting operations. Over the past decade at BlackLine, he has played a key role in scaling the finance organization of a public SaaS company while navigating transformation, automation, and evolving regulatory demands. Welcome, Patrick. Thank you so much for being here with us today.
I'm happy to be here, Megan. Thank you.
So, Patrick, you've spent a decade at BlackLine and have lived through digital transformation from the inside. So when you look at finance today, what feels fundamentally different compared to even 3 or 5 years ago?
Yeah, it might be a blinding statement of the obvious given the nature of this podcast and what we're going to talk about today. But when I joined BlackLine 10 years ago, we were still in a strictly SaaS world of automation where decisions and automation were binary in nature, whether it was through a SaaS platform, RPA, whatever technology was out there, it was yes or no. And that's where the technology had been for decades, whether it was on-premise or a SaaS space or in the cloud. In the last 3 to 5 years, we've seen the rise of AI. Now, years ago, AI was mostly used in a creative fashion, maybe more marketing, generating content, emails, artwork, logos, things of that nature. But what we've seen is AI now move more into our space, the office of the CFO, the more professional space in terms of, maybe not more professional, but the more technical space in terms of what can AI do in the world of accounting and finance from a agentic standpoint, from a decision-making standpoint, from a transactional standpoint, that we have seen the evolution of that. It's still early. There's still a lot of dialogue out there. There's an emerging narrative. We are one of those companies that are obviously leaning in heavily on our investments with AI to augment our current technology and enhance it.
And to me, BlackLine seems like a household name. Everybody knows it, but maybe there's some listeners out there who maybe don't. So you want to just give us just a quick overview of what BlackLine is and how it's differentiated in the marketplace?
Sure, of course. So BlackLine, we are a office of the CFO platform. And what that means is we have 4 primary solutions that are connected through our Studio 360 platform. And to keep it really succinct, we help companies close their books more efficiently, more accurately, with less human intervention. We help companies with their intercompany transactions. We help companies with their financial close, with their analytics, with their business reviews. And we also help companies with their collections. So when you look at the mandate of a CFO and what that person is responsible for, an overwhelming majority of that person's work is financial reporting, closing the books, or the team's work, as well as accounting operations, billing, collections, et cetera. So we bring automation in that area, and we've been around for about 25 years, and we are the largest company in this space that does specifically what we do in terms of serving the office of the CFO and financial close.
And let's start simple. So when people hear the phrase agentic AI, it sounds somewhat futuristic, although less futuristic today than it did maybe 3 years ago. So in practical terms, what does it actually mean for the office of the CFO?
Maybe let's start really basic in terms, and that'll kind of lead into the conversation. So agentic AI, let's just take the word agentic. It's an agent. And what does an agent do in the everyday life of a person? An agent acts on your behalf. And it doesn't have to be a sports agent or Hollywood agent. Just you can have an agent in any capacity that is acting on your behalf at your instruction. And that agent is given decision-making framework. Like, if this happens, go do this. Or this is the type of decisions I want you to make on my behalf. This is how I want you to represent me. This is what I want you to do for me. So just in the most basic terms, that is what an agent can do for a person in their professional or personal life. Then you take it one step further. You say, well, you have agentic artificial intelligence. So instead of having a person do this work for you, you have an agent. You have AI built within your platform that is out there and doing work on your behalf as a finance or accounting professional. And while we have high levels of automation in the industry already, the industry does require a lot of manual intervention. You have to go in, log in, move things through workflows, click this, click that. And it still requires a lot of human intervention. It requires some basic decision-making and some very complex decision-making. So while the level of automation in this industry has moved exponentially in the 25 years I've been an accountant and the 10 years I've been at BlackLine, the difference now is you can now program an agent, design an agent, and release it into your financial systems ecosystem with a certain level of instructions with some variability. And that agent can go out and basically do the work that you've been doing, the more rote work, the more mundane work, the clicking, the moving through workflows. And what that means if you're a finance and accounting professional, which that can be a major, major time commitment over the course of several weeks or the course of a year, is you're removed from that. You're staring at your screen rather than clicking and constantly being interrupted by what the system is doing in the background. That agent is working on your behalf. It's like every person has their own staff finance and accounting professional working in the background, doing that work for you, so that you, as a professional that's been doing this, can step back and say, okay, I'm no longer being interrupted by the mundane. I can be more analytical. I can be more value added. I can be more strategic and not be interrupted or distracted by this rote and mundane work that's happening in the background that this agent is now doing on my behalf.
Sounds like a dream come true for most accountants. So I'm curious about the BlackLine product. Like, if someone wants to implement it, what is the process? Is it pretty much off the shelf, or is there a big implementation project that comes along with it? Or how do people use it?
So we have over 4,000 customers as an organization. And our product, I wouldn't say it's like shrink wrap right off the shelf like you would see at a software shop. We serve middle market, enterprise, and mega enterprise companies. So we serve, I believe it's almost 70% of the Fortune 500 right now. We serve companies with $1 trillion market caps, and we serve companies that have $200 or $300 million in revenue. We are not like a business to consumer business. That's not what we do. We serve companies that have a accounting and finance department and a big enough scale of business that requires more automation within their office of the CFO ecosystem. So with that being said, yes, we do perform implementations for some of our solutions that are maybe a little more straightforward. You can do that in a matter of weeks with very low touch from your IT department. Sometimes you can even run it within your own finance and accounting department with a little IT savvy. And then, of course, we have more complex solutions like our intercompany solution that takes much more time. But typically, the more time something takes, the more value it delivers, the more complex problem it's solving. So there's a direct correlation between the size of the problem, the complexity of the problem, the value in solving it, and the bigger the value, typically the longer it takes to implement. But if you as a customer are actively engaged with us, we will get an implementation done in a couple weeks. If you buy just a couple solutions, if you buy the whole suite, you can get it done in several months. We're not talking about maybe a traditional ERP here that could take years. That's not what we do. We sit on top of an ERP system and we take data in and out of the ERP. We automate the data from a transactional standpoint. We help companies reconcile the data so it's accurate. So we sit on top of a company's ERP.
And looking back at your own journey, was there maybe a moment where you realized that AI wasn't just another automation wave, but something that was going to materially change how finance operates?
I can't say there's like one singular seminal moment. Like if anybody could sit
Like a
there,
lightning bolt.
yeah, if anybody could sit there and say, I had my AI moment and this is when I knew it was $1 trillion idea. I mean, that's pretty impressive. And maybe there are a handful of people in the world that did that and they are where they are. But I'll give a good example. Maybe an example, I got very deep there in terms of financial close software and what we do. And it really resonates with accounting and finance professionals that are familiar with us. But maybe a basic transaction that everybody can relate to. Everybody's received a bill in their lifetime. Everybody has paid a bill in their lifetime. So the invoice goes out from whoever you bought it from, the cash comes in, and that cash, when it comes into your bank account, if you sent that invoice, has to be applied to that invoice to indicate it's been paid so that you no longer have to chase that invoice down. It's part of your books and records. The transaction is complete. That's economics or accounting 101. Every business that has revenue does that. So I don't know, it was a handful of years ago, not 10, but less than 5, where I was looking at a very early stage agent that applied cash, where it basically said, okay, here's cash that came into an account. Let me figure out what invoice that this relates to and apply this cash. So Megan, historically, before the advent of AI, and machine learning was slightly before that, it's a blurry line in terms of where one became the other. But before that is binary. And if you sent a automation tool out to apply that cash, if any variable changed, anything at all, it would reject it or say, I can't find the open invoice. And then a human being would have to go in and manually apply that cash, which takes time, and humans, it costs more money. And so in the days of typical automation or typical RPA, where it's 1 or 0, yes or no, you could take that transaction 1,000,000 times, and if one little variable changed, like the company changed their name or something like that, or their legal name, or even the configuration of the invoice changed, it would reject it 1,000,000 times out of 1,000,000 times. So then I saw this agent get released into a similar ecosystem, same transaction. And just for edification, in this particular example, the company slightly changed their legal name and the address moved off to the right side of the invoice versus being on the left. That's it. Everything else remained the same. And the first 3 or 4 times, the agent did what the traditional technology did. It ran into the invoice and said, I don't recognize this. I don't know what to do. I don't know what cash relates to this invoice. And by the 3rd or 4th time, the agent said, wait a minute. It didn't really say that, but it sent a message saying, wait a minute, this address is the same as a current vendor. The invoice configuration changed, but it's the same banking account. And the amount on the invoice matches to the penny an amount received the other day into your banking account that is in line with the instructions that you gave this vendor. The only thing that changed was where something fell in the invoice, the legal name of the vendor. And it said, hey, is this the same vendor? That was an aha moment for me, because I had been living in a world where it was binary. It was 1 or 0, is yes or no. And now I'm sitting there saying this technology can actually learn. It can adjust. It can adapt without a human being, A, going in to perform the transaction manually, and B, the vendor having to rewrite the code or redesign the system. And I said, this really has legs. This really has potential. But this might be getting to the second half of this conversation. This could be really dangerous in a financial and accounting environment that is highly regulated, that is governed by the SEC, by the IRS, where perfection is the only allowable outcome. You can't be close enough. You can't be 99% right. You have to be perfect. So if you have a technology out there that can learn and adjust, you have to make sure that the adjustments it's making are correct. And that's where we are today. We are designing these agents very prudently in our ecosystem to make sure that they're 100% right and that the judgment, if any, that they're exercising is consistent. And that is what's most critical right now in our industry. We can't afford a typo. We can't afford something being slightly off. It has to be perfect, and it has to be trusted, and it has to be accurate. And that's kind of the threshold we're crossing right now in the office of the CFO. Not just us, but maybe our competition to a certain extent. But we are leaning into this and have been for several years as we design these agents for our customers that trust us, that have given us brand permission, and we would never do anything to compromise that.
So In your role as Chief Financial Officer, where have you seen agentic AI create the most immediate operational impact within financial close or intercompany processes? Where do companies get the most bang for their buck?
I would say right now, AI is being used effectively within financial close in general, which intercompany is kind of a subset of that, on transactional level controls, on processing transactions. The example I just gave there, applying cash, identifying accounts that are out of balance. It's right now within the accounting space, we see the most value being delivered in terms of what I'd say risk management. You can use AI to review your financial statements and it can identify irrational trends in your numbers. And that typically might indicate a mistake was made or an error was made. It can review journal entries and identify journals that are out of sequence or break a certain pattern, which might be indicative of an error or just somebody fingering something in incorrectly, honestly, but it's still a mistake and it has to be corrected before it ever goes outside to the public markets. So right now, as we sit here today, we're seeing agents being very effective at identifying risk, at reviewing massive volumes of transactions a human being and traditional software cannot do, which we do. And then, probably the next level is we're seeing agents doing very basic tasks that accountants used to do, preparing reconciliations, preparing or reconciling accruals, preparing journal entries, applying cash. This is stage one. It's low judgment, it's high volume, it's task oriented, it's demanding on people, and it is the perfect place to release agents. It's low risk, it's high volume, it's low judgment, it's easily reviewed, and it builds trust in the technology. And then the next phases of these agents will start when we get there as an industry, start to allow them to exercise a little bit more judgment. But right now, that's where we are, and it's a huge value play. For a large enterprise company, these $50, $100 billion companies, people don't realize that they have thousands and thousands of accountants. And the amount of time spent on processing these transactions is significant. And to automate that all with an agent that never sleeps, never tires, and honestly, if designed correctly, doesn't make mistakes, that is a huge value proposition for the industry right now.
So, question for you. If you were speaking to someone who was thinking about studying accounting, would you steer them down that road, or do you think accounting is going away and that AI is going to take over?
Accounting itself can never go away, right?
Yeah.
I mean, you always need accounting, and AI will never is a strong word. It is excessively improbable that AI can replace all of accounting. You always need some type of human intervention to review from a quality control, from an accountability standpoint. People, the general public, they make investments on the financial information that accountants provide. They trust that information. They put their money behind those financial statements that indicate how a company is doing financially. And so as long as that exists, and as long as that's regulated, and as long as the SEC and IRS oversee reporting and income tax returns, a human being has to be held accountable. You will always need accountants. You will always need that specialty. You'll always need accountants to help design these agents as facts and circumstances and laws change. So accountants aren't going away. There's no doubt in my mind. Now, what I do see happening is the skill set of accountants changing dramatically. And I'm already seeing that in my world in terms of how we hire. If I went back 10 or 15 years ago, the traditional process to recruit an accountant, you'd look at Big Four accounting, you'd look for a CPA, somebody that's been through it, that's technical, that knows what they're doing, and you want to bring in that technical accounting skill set into your environment. Full stop. Now, when I'm interviewing or my team's interviewing, we're looking at accountants. You still need to be an accountant. You still need to understand the tenets of the profession. But just as importantly, you have to be more than tech savvy. You have to be data savvy. You have to be AI savvy. You have to know how these things work or could work. You have to lean in and embrace technology. And so the lines are really being blurred between accounting, finance, and IT skill sets right now, to be perfectly frank, and data scientists. Throw that in there as the fourth leg. And so we're recruiting a different type of talent because we see where the industry is going. And that kind of talent will thrive. They will not be replaced. They will thrive in this environment. And maybe I can prove is a strong word. I can show historically that this has always been the case. 40 some years ago, and this sounds crazy to somebody that's maybe doing this 25 years, but I was told stories from my former bosses years ago that the advent of the personal computer, the desktop computer in the early 80s, started appearing in accounting offices. And shortly thereafter, Microsoft Excel came about. And believe it or not, the program that is probably core to the DNA of every account, people rejected it. Accountants rejected it. They want to stick to their green ledger paper and their red pencils and their rulers, and this is the way we do it. And the accountants that were slow or refusing to adopt Microsoft Excel and using a computer and throwing away reams of paper and doing it all on a floppy disk and a spreadsheet, those accountants went the way of the dinosaur. And the accountants that leaned into it and embraced and invested in that technology, they accelerated their careers. Fast forward 20 years later, turn of the century, and that's when we came about. BlackLine, shortly after the year 2000, 2001 to be precise. SaaS players, cloud-based players, at the time we were on premise, but cloud soon thereafter. We said, you know what? We can take what you do in Excel and we can automate that. We can make your life easier. And sure enough, those accountants that were living in Excel for 20 years said, no, you can't. I'm not going out of Excel. I got to control everything. I got to do every formula. I got to do every transaction. And the accountants that did not adopt the technology that's out there today, they went the way of the dinosaur again. And the accountants that leaned into the BlackLines of the world and other players like us that are adjacent to us or more downstream, they succeeded. They accelerated their career path. They were tech savvy. So here we are, generation 3. And it's the most profound. AI is bigger than the two things I just talked about, but it's no different in theory. And what I mean by that is AI is here to make our lives easier. It's here to augment our experience. It's here to enhance our experience. It's here to make us more efficient. And you can either be scared of it or reject it. And again, go the way of the dinosaur a third time, or you can embrace it, lean into it, learn it, be more data savvy, be more tech savvy. And what you're going to see is accountants that are equally technical in the debits and credits as they are in the technology, even more so than they are today. And we will not go away. We will just get better at our jobs, and our jobs will become more interesting and less rote.
So can you maybe share an example where AI meaningfully changed how your own team operated, whether in speed, accuracy, or decision quality?
I could probably give you quite a few examples of this one. Let's go to the other side of the house. What I mean by that is maybe the finance side of the house. As a CFO, I came up as an accountant. If that's not terribly obvious right now, I was a CPA. I was at Big Four. I'm accounting minded. When I came in here as the controller, I've used our solution for 10 years now. I'm dialed into it. That's how I'm wired. I'm very automation oriented, process oriented. But even on the finance side of the house, this is the side that does budgeting, forecasting. They look into the future. Accountants look into the past. That's the way it works. It's a great partnership. And we have been able to use some internal tools, design some tools to do forecasting. And we're not hands off the wheel in that regard where we just let AI do it. But let's say you have 4 people that spend an inordinate amount of time forecasting and predicting the future and helping figure out how much are we going to grow? How profitable are we going to be? How much cash flow are we going to generate? Well, if you have AI, that's the 5th invisible person in the room. That's the person in the room that is taking all inputs, doing its own analysis, and kicking out an output. And right now, where we stand is it's a 5th opinion. And so we have the traditional way of doing things, the human way of doing things, and then you have the AI way of doing things. Then you reconcile and you evaluate, okay, did AI misinterpret an input, or did it miss an input, or did it figure something out that we've never been thinking about? And so it's like bringing a new way of thinking, a comprehensive way that can consume data that no human being can, that can process data that no human being can, but it doesn't have context yet. It doesn't maybe know the business the way human beings do. It doesn't know exactly what we're trying to achieve strategically, but it is a 5th opinion in the room, which is worthy of consideration, and it makes you smarter. Anytime you have another opinion that you have to think about and evaluate in life, it makes you smarter. So that's one area where Did it make us faster at forecasting? No, but did it make us better at forecasting? Yes. That's something that's forward looking. Going back to maybe the accounting space, I'll just leverage the example I gave you before, Megan, just to stay consistent with the interview or the podcast, where that example I gave you of that agent that was applying cash, we use our own solution for that. And we used to have to manually apply every single dollar of cash that came in here to an invoice. And right now, about 80+% of the time, it is hands off the keyboard. Invoice goes out, cash comes in, cash gets applied, gets pushed to your system of record. No human being ever gets involved. So think about that if you're a company, that 80% of your transactions are now being performed by an AI agent within your collections platform. And that is wildly effective and efficient. And then it allows those collectors, those people that were mired in that level of detail or that clicking, to do more fruitful things like analyzing the tougher accounts, making the tougher phone calls, really digging into the numbers rather than just spending all day processing data. So I gave you one example where it made us better and one example where it made us more efficient.
Both incredible examples of just how powerful it is. So you touched on this a bit, but many finance leaders worry about control, auditability, and regulatory risks. So how do you balance the promise of autonomous decision support with the strict governance requirements of a public company?
We more than worry about that. If you release financial information to the public that's materially incorrect, that erodes investor confidence, that undermines your stock price, that sometimes can cost jobs, if not careers, the stakes are extremely high. As I said earlier, you have to be perfect. And that's a very, very high bar to clear when you're developing a technology that changes on its own. So it's no longer binary. It's no longer programmed. What we're saying is it has the ability to eventually change on its own. So that's why, I believe BlackLine has a distinct advantage here, where we know the stakes. We're subject matter experts. We have 25 years of data, clean data, accurate data of our customers, or up to 25. And when you think about it, our customers, they need BlackLine to be perfect. They know the stakes. They know the risk is asymmetric. They know it's highly regulated. And it's not just our customers, but our auditors have to sign off on whatever we use. Regulators have to approve the technology or put rules at least around the technology. So the stakes are very high. So with all that being said, people like me, we know we need to lean into AI. We know it's the future, but we're being very prudent about it. We are testing it. We're validating it. Our level of adoption will be a little longer. But once you build trust in a technology, especially in this industry, once you get word of mouth, once you know it works over and over and over again, that flywheel accelerates. It becomes hyperbolic in terms of the rate of adoption. So we might not dive in with 2 feet in the accounting and finance profession and just try anything. We're going to try it. We're going to test it. We're going to be prudent. We're going to get aligned with our auditors, with our regulators. And once all that happens, though, the sky's the limit. Our TAM, our total aggregate market, is only going to skyrocket in terms of who we can sell to and the value we can provide. So we're excited about it, but we're being very prudent in how we're approaching it and how we're designing it. And it's just because of the level of stakes. And we know we've built trust over the last couple of decades, and we're not going to do anything to undermine that.
So I have a question for you, and I know you're not a developer, so I'm not sure if you'll have an answer or not, but how do you prevent it from going off the rails? How do you put guardrails into place where you know it's doing what it's supposed to be doing and not just what it wants to be doing?
I'm not a developer in today's age. When I graduated college, I had a brief stint with Y2K coding, but that is obviously an antiquated technology. But I at least know the pain of programming and the diligence and the level of focus and effort that it requires, and how AI tools are making that easier. If I want to up-level the commentary there of how we design something that can be trusted. Right now, a lot of AI, you can throw it in a few buckets. Outside of accounting and finance, you have creative AI. The number of outcomes are literally infinite.
Yeah.
And that works really good in certain professions, creative professions, design professions, things like that. In our world, you can really boil it down to 2 things. You give AI a ton of data and you ask it for an answer. And that is maybe what, some companies are doing outside of our space that do not have the infrastructure, do not have the platform, do not have the workflows, do not have the data moat, haven't done it before, and don't understand the stakes. They're giving AI an infinite number of inputs and say, what do you think the answer is? And that's probabilistic outcome, meaning the AI will come back and say, I'm 98% sure that this is the answer. This is the financial outcome. That works maybe if you're forecasting, maybe. It definitely does not work when you're reporting financial information that has already happened to the public. You can't have AI that says, I'm 98% sure this is right. There's not a CFO in the world that will sign off on that. And if you're not in this profession, 98% sounds great. That's almost an A plus, but it's literally not good enough. If you're 5% off in your financials, you're restating, you're probably losing your job. So that's the level that you have to operate at here. So the other side of this is deterministic AI, not probabilistic AI. And that's very important. And for AI to be deterministic, you have to release it in an ecosystem with guardrails. And that ecosystem is our current SaaS platform that we're currently releasing AI agents into as we speak. We're very transparent about it with our customers, letting them test them for free. We want them to get comfortable with it, test it, get feedback. That's what we're doing. But we're doing it in a very different way than maybe a company that's not in our space. We're saying, okay, AI agent, here's a pool of data. We know it's accurate because it's already been through our system. We've already reconciled it. And here are the workflows that you have to stay within to determine the right answer. And these workflows have been developed for 25 years, and it keeps guardrails on the AI from just going off in an infinite number of directions. And so that is how we are designing agents right now to determine an outcome that everybody can trust, that's 100% accurate, because the infrastructure is already there. We have that history and that structure in place. So that's what really makes us different. That's what makes incumbent SaaS players in this industry that have been doing this forever with such a competitive advantage. We have the ecosystem already in place. We have the architecture in place. It's a safe space for AI to operate rather than just dropping it in a pool of data and hoping it comes out 100% accurate.
And as AI becomes more embedded in workflows, how should CFOs think about accountability? As an example, if an AI-driven process flags or even executes a transaction, who ultimately owns that decision?
So ultimately, there has to be a human being that signs off on all this. It's on every SEC document that goes out there. But the CFO obviously is going to have a downward org. What I envision seeing happen is you might have less maybe doers at the entry level of processing transactions, and you have a lot more reviewers reviewing the outcomes of AI. They have to be held accountable for the outcome of AI. It's no different than now, but instead of reviewing the work of maybe 10 staff accountants, you're reviewing the work of one agent. It's the same amount of work. It's just done more efficiently. And those staff accountants are probably doing more work analyzing than crunching numbers. They're providing better business insights. And that's why I know the accounting profession can't completely go away. You have to keep training new accountants, new blood, new skill sets coming into the profession. And the nature of the work they're going to do will change, but we will still need them doing work and notably reviewing work.
I know we were talking about going the way of the dinosaur, but looking ahead to the next 3 to 5 years, what do you think is going to separate finance organizations that successfully adopt agentic AI from those that struggle to move beyond traditional automation?
It's culture. I know that might not be the answer you're expecting, but it normally starts with tone at the top and it starts with culture. You have to, first of all, as said earlier, identify the right talent. You have to change the way you're recruiting, change the profile of the type of person that you're hiring into your department. You have to change the mindset. You have to create a department or a office of the CFO that is highly enabled, highly trained. I think the amount of training is going to go up, not down, over the next couple of years as this technology advances. And you have to train those that are coming in and those that are here. You have to encourage people to lean into it, to trust it. It's not your enemy. It's your friend. It's going to make your life better. It's going to advance your career. The only way it's going to replace you is if you reject it and don't embrace it. If you reject it, it will replace you. If you embrace it, it's going to make you better at your job, and it's going to make you even more entrenched where you're working. So it's driving home that tone at the top, developing and designing that culture internally amongst your people that have the skill set, that want to enhance that skill set and want to embrace that skill set. And if you do that and do it prudently, and that'll be part of the training in terms of this is the type of AI we can use and this is the type of AI we can't use. And if we can use it, we better test it, test it and test it and test it again. But once we get there, it's going to make our lives even better than they are today. So that's where I would leave that. Like 3 to 5 years, it comes down to leadership, and it comes down to setting the right tone and culture and building the right team to open your arms to AI and not be afraid of it.
Patrick, thank you so much for being here and for helping us understand that agentic AI isn't just another automation wave, but a fundamental shift in how the office of the CFO operates, governs, and creates value.
Well, thank you, Megan. I appreciate the time.
Yep, and I appreciate you taking the time to share your knowledge. And to our listeners, take care and please tune in again next week.
You've been listening to CFO Weekly, presented by Persona. Please subscribe wherever you get your podcasts to hear all of our episodes. Want to learn more? Check out personiv.com. Thanks for listening.